I've helped steer investors through four global financial crises, financial storms. What I'll share today is not theory, it is strategy forged in real markets under real pressure over 30 brutal and beautiful years. So, this isn't about playing it safe, it's about playing it right. So, here's what we'll cover tonight. A system, from red to green, is a system to turn losses into long-term gains. It's built for entrepreneurs who want to win back control, parents who want to raise investors, not gamblers, and young analysts hungry for real-world skill, not textbook hype or fluff. No. So we'll have a quick look at the current market conditions, the inflation trends, interest rate shifts, and what they mean for positioning today. We'll also learn my stock selection system. So you stop chasing tips and start making moves. If you stick around until the end, I've got a gift for you. I think you like it. It's going to be a surprise. All right, let's get into it. So here's the truth. 90% of regular investors lose money, not because they're stupid, but because they're emotional. They make trades based on feelings, not on research or tested strategies. Or they trade because it looks exciting, or they trade because someone online said it's a quote unquote sure thing or a sure win. And without structure, even the smartest investors end up guessing and losing. So I've seen it firsthand. CEOs, yeah, founders, even finance pros, and those they fondly call the finance bros. Brilliant minds, but crumbling when it comes to stocks. Because out here, emotion eats logic for breakfast. And without a plan, you're just another smart person flipping coins. So, yeah. So, next slide, please. How do smart people still lose money in the market? Simple. No plan. They don't know what they're risking, or even they don't know what they're aiming for. There's no research. They chase hype, they copy noise, and they hold junk while they panic sell quality during the most inopportune times. So there's no strategy. They guess their position sizes, they chase trends, they wing everything. There's no risk control. So when the market dips, they freak out and they sell at the worst possible time. That's what happens when you invest without a system. It's not stupidity, but that cycle, it's not stupidity, but it's just simply what happens when you invest without a system. So this cycle is what I call the investor doom loop. And tonight we're gonna break it. So one common mistake investors make is overtrading. But here's what's insane. If you're a trader and you trade a lot, you miss just the 10 best days in the last 20 years of the market, in the stock market. Your returns can drop by more than half. Yes, half gone. Just because you blinked at the wrong time, trying to be too smart and time the market. It's like shooting basketballs blindfolded in the NBA finals. Smart money, they stay in the game. They stick to the system. So let's plan. They let the plan do the heavy lifting. So in the next slide, it's never really just the money. It's the stress that wakes you up at two in the morning. It's the shame of not knowing what went wrong. The second guessing that never stops. Market noise becomes a daily source of anxiety for some people, and the losses, well, they don't stay in your portfolio. They actually, in worst possible scenarios, they leak into your energy, into your mood, your family conversations. This is the emotional tax of investing without a plan. That's why it's very important to invest with a plan. This is the emotional tax of investing without a system. And it's a tax you don't have to keep on playing or paying. So why do even smart investors still lose? 30 years of hard sorry. So for today's game plan, what we'll cover today, we'll cover why even smart investors still lose, We'll look at 30 years of hard-earned losses distilled into what's essential, and the four tools professional fund managers actually use, which I call the big three, no? The GREAT system, the SIF, and the JT criterion. We'll talk about that a little bit later. So we'll talk about how to protect your money without panicking, um, and we will talk about your full step-by-step system from red to green. Yeah, that's basically pretty much what we'll cover. Again, we'll cover why even smart investors lose, 30 years of hard-earned lessons, the four tools professionals actually use, and we'll talk about how to protect your money without panicking. So it's your full step-by-step system, which is from red to green, and you stay until the end. This is what I was talking about. I'll ask for a password, which I will say at the middle of the webinar. And with the password, if you can say the password or put it in the chat at the end of the webinar, you will get a free starter pack of From Red to Green. So if um, hope you guys will be happy with that. So go back one slide, Tim, please. Okay, so um, I've been in this game for 30 years. That's a pretty long time. From the Asian financial crisis in 1997 to the dot-com crashes in 2001 to the global credit crunch in '08 to the historical global lockdowns of 2020. I've managed portfolios through it all, retail, institutional, and everything in between. I built systems pretty much to protect people from chaos because I've seen a lot of chaos in the markets. Now I'm giving you that system. Next. Earlier, I said it's all about the systems, but even the best framework is useless without one thing: clarity of intention. Because without it, even the smartest frameworks turn into sloppy guesswork. When I rebuilt portfolios that were down as much as 40% at some time, no? Or more even. I didn't just plug in models or financial models or run numbers. I asked three hard questions. Number one, what do we own and why? Number two, are we managing risk with discipline or denial? And number three, are we reacting or deciding with clarity? That's where From Red to Green was born, not just from data, but from deliberate, grounded decision making. So, uh, that's also why I don't teach people how to forecast. I teach frameworks. So we'll talk about the importance of frameworks. Well, first of all, great investors don't guess; they use systems. Um, Real confidence comes from clarity and not prediction. So we're not teaching prediction; we're talking about systems to produce clarity. And here's one very important thing: emotion fades when your plan is crystal clear. You're less susceptible to making unwise emotional decisions in the markets when you have a crystal clear plan, well thought of plan based on a system. Next, please. The most investors think to be successful in the market, I need more information. Yes, but what you actually need is a system. Um, these three frameworks, which you see in front of you, are what I call the big three. These are the main tools I use to manage over $1 billion in assets under management through four market crashes. First is the GREAT framework. GREAT is an acronym. We'll go into that a bit later. It tells you basically when to invest. Is it a good time to invest or not? The SIF system is is a system, my system, that shows you or teaches you what to buy, what stocks to buy. And the third one is the JT criteria, which guides me how much of any stock, how much should I own of a stock in my portfolio. So it's very systematic, no? This is your pro level toolkit for real investing mastery. No more guessing, no more hype, just clarity, control, uh, from which flows confidence. in your decision making and managing your portfolios. So let's dive into each one. Next, please. So the great framework or the great filter, I run every decision I make through a 5 point gut check, which I call the great filter. It's the tool I use to assess what's working, what's risky, and where smart investors should position today. Each yes answer in this great framework um, is equal to 1 point. A score of three or more, I move, I buy, and I rebalance the portfolio. A score of less than three, I wait, I stay out of the market. So G, so it's called GREAT because it's an acronym. So G stands for GDP growth. Big headline, inflation dropped to 1.3%, the lowest in years, which could boost GDP growth by boosting consumption because food and transport costs have been cooling sharply, giving both consumers and businesses room to breathe. That's a real signal that the economy is stabilizing. So that's 1 point for G. R stands for rates, inflation and interest rates. Inflation is going down. The central bank isn't under pressure to raise rates. In fact, we could see the central bank as early as June 19. Ano ba yan? Yeah, as early as June 19, which is next week, the central bank could actually start cutting rates. In fact, um, yeah, so this is great news for borrowers and for the stock market. So, uh, in terms of R for rates, the score is +1 also. E stands for corporate earnings. So lower costs from lower inflation, stable interest rates improve the earnings outlook, especially for consumer and property names. For example, Ali, Ayala Land, and URC. Margins should expand, hence earnings prospects are turning positive. So that's another 1 point for E. And A stands for adverse risks. So now the caution flag is that the risks from higher US tariffs lingers, but the recently announced lowering of the stock transaction tax bodes well for improving local market liquidity. In contemplating, so I'm contemplating an upgrade to this particular risk score, but for now it's still a zero. So A is zero. Finally, T stands for trends in liquidity and foreign buying in technical analysis. So still kind of soft. Foreigners are still net selling in the Philippines. So this is a zero for now. But even if foreigners, however, are selling, we're already seeing selective buying inflows into large caps in the market. Um, so yeah, so what's the signal? The great score, again, GDP growth, rates, earnings, adverse risks, and trends in foreign buying. The great score is 3 out of 5 based on what I talked about earlier. So that is a neutral. That means a neutral on the market. So what do pros do? So basically, the bottom line is 3 means inflation is easing, so that's a green light. I'm cutting cash and moving a little bit more into equities, but overall still a neutral score. What do professionals do at this time? They double down on security selection. Even if they're not so bullish on the market, they're neutral. They're starting to look at names they want to invest in. So let's now dive into the two other systems which form part of the big three. So this is the great system, which tells you is it a good time to invest or when to invest. The SIF system tells you what stocks should you own. So what's the question every investor asks? As a fund manager, I use the SIF system, which is a three-step process to filter hundreds of stocks down to a focused few. No guesswork, just structure. So step one, screen using the Bears checklist. So look for industries with number one, high barriers to entry, abundant suppliers, reliable and stable regulation, easy or limited substitutes, and subdued competition. So that's where great businesses thrive. Step two, inspect the company's financial health using the Poland filters. So earlier it was the Bears filters, now it's the Poland filters. So scan, so whichever companies that passed the Bears checklist, they you put them through another screening, which is the Poland filters, wherein we screen these surviving companies based on profitability, ownership returns. That's why it's Poland. P is for profitability, O is for ownership returns, L is for leverage, I is for interest coverage, N is for near-term liquidity. So if the stocks that survive the first screening survive this Poland filters, if it passes 3 out of 5 of the factors, then you can move on to the next and last filter, which is the fundamentals. So fundamentals, we screen for fundamentals, we assess management, quality, investment risk, and valuation for these companies. Um, this system gives you a clear, confident list of stocks worth owning, not just for trading. So if they pass through the great, the SIF, and the Poland, and then you end up with a list of high quality stocks that you can add or should comprise your part of. So once you've picked the right stocks with the SIF system, the next big question is how much should I bet on each one? This is personal for me. I've seen smart investors lose, not because they picked the wrong stock, but because they bet big, they bet too big or too small. That's why I created this is the last system, the JT criterion. It's a pro tool I built after 20 years of managing money, managing billions in the market. So today I'm handing it over to you. So here's how it works, the JT criteria. We calculate first how much to invest by balancing how much you can win against how much you can lose. So it's a risk return kind of thing. First, you assign chances of winning, probabilities. Um, Assign chances of winning, losing, and staying flat. Then we crunch the key numbers. We look for number one, we calculate the expected value, which is your likely average gain. And then we calculate the edge, which is your best case or your base case gains. So again, the expected value is your likely average gain. This is the weighted average of all possible outcomes, while the edge is the weighted average of all positive outcomes. So finally, so we divide the EV or the expected value by the edge and adjust for both liquidity and index weight or index importance. And boom, you get a clear, smart position size after that. Finally, we pick the 5 best stocks based on their scores, the JT criterion scores, and size them properly or commensurately. So no guessing, no YOLO bets, just real confidence built by math, not emotions. Uh, yes, next, please. Most investors. So now we'll talk about risk management. So earlier we talked about uh, industry. We talked about asset allocation. We talked about stock selection. Now we're going to be talking about stock selection and portfolio management. Now we're going to be talking about risk management, which is another key pillar in the from red to green process. So risk management is there because most investors lose not from bad picks. You'll be surprised. A lot of times, investors I've worked with, they don't lose money because they made bad stock picks. Uh, they lose money because they had not so great or even bad risk management. What do I mean by that? They over concentrate, they panic sell, and they forget to rebalance. Pros do the exact opposite. They size positions right, they spread risk smartly, not too not too diversified though, but they spread risk smartly, and they stay disciplined. So that's what from red to green builds in the learners. That's what the from red to green stands for. Very clear rules for exposure, very clear rules for diversification and volatility control, meaning up and down, which we associate with the risk. So even when the market shakes, your plan doesn't. Next, please. All right. So we've talked about the real problems, we've seen the strategies, and we've built a system, or we've gone through the system. But if you really want to lock this in, you'll need the full game plan. This is why I created From Red to Green. It's a complete system that shows you how to bounce back from market losses and protect your money and to build the future you want with very, very important real structure. So that's the keyword for tonight. The keyword is structure. So stick around until the end. I will ask you what the keyword is, and I will give you the starter pack. All you have to do is type in at the end when I ask for it. Okay. So again, real structure, very important, not random guesses when you are in the business of investing or even for yourself. So no more hype, no more hoping, just clear moves, smart habits, and a system you can actually trust. So the best part of all of this, you don't need 30 years of trial and error like I did because I already did the heavy lifting. Okay, so talking about structure, here's how everything comes together inside From Red to Green. It's again the four-step system I've used for years to build strong winning portfolios. So first is asset allocation at the top. No, you pick the right mix of stocks, cash, and bonds based on your goals and the market mood. Two is investment research. So use the SIF system to screen, inspect, and filter. So SIF means screen, inspect, and filter. So you're picking the right stocks, not random hype. Uh, and then there's portfolio management, very important pillar. So apply the JT criterion I talked about earlier for portfolio sizing, portfolio construction, to figure out how much to put into each stock without guesswork. And then last is risk management, key part of the system. As mentioned earlier, we follow rules to protect your money and to keep it growing, even when the markets get crazy. So the bottom line here, this system helps you to stop guessing, stop panicking, and to start investing with real confidence and real control. So you've seen the system. Now let's talk about what you actually get and why smart investors call this. So this isn't just another course, as you probably can tell by now. It's a full investment transformation system built for long-term results. You get the From Red to Green playbook, the exact system I used as a fund manager to recover from drawdowns and to deliver consistent gains. It's built for it's built on 30 years of wins, failures, and my global training since I worked with global financial institutions before. You'll also receive monthly strategy emails. And if you're subscribed to my newsletter, you will get that weekly, at least ideas on the market and life. And you'll also receive, as part of the core, at least the core program from Red to Green, um, my investment recovery toolkit, which is so it also includes a personal portfolio audit if you go through the premium programs, and I will pretty much give you my sense of what you need to adjust in your portfolio and why, and how to position it best for to optimize your long-term returns. No, it also includes a mindset masterclass for staying calm under pressure, and group coffee chats with me and fellow students when the schedules align. No, so price. So this is the value that you get, the price that you pay. This delivers actually more than $3,000 in real world value. But we'll talk about the price later. This is built for executives, for parents guiding the next gen, and for young professionals who want to sharpen their knowledge, no, and personal investing skills. So, so this system, this course is relatively fresh, but the breakthroughs we're hearing from our first learners have been simply energizing and real. The common thread among what everyone is saying is that it's well, from red to green gives them a clear, structured, practical approach. It's a professional grade system that gives them that's very simple to use. I think that's very important to mention here. As and for many, it's already proving transformative, giving them clarity, enabling them to make sense of the markets when there's a lot of like voices saying different things that are actually noise. No, it allows you to cut through the noise or to decipher what is important in the markets and what is not important, what is just noise. So I can't wait to hear what your experience will be when you uh, hopefully, yes, there. So here you have the different courses. So you have the starter pack, which is available at 995 pesos only. The two others are in dollars. Core, which is 499 US, and Premium 999. And these are the what's included in each. So you can take a snapshot of that. Um, but I would really recommend at least the core. So you get the full on system. And if you need guidance, personalized guidance, and my insights from 30 years of experience, and relative success in the markets, then premium is good for you. I also have clients who are father and son, or parent and child, and their motivation is really to lead their children into investment literacy. So they're acting like investment teams. Actually, it's very inspiring. So, yeah. So we'll go back to that slide on the starter pack. So if you're a bit on the fence and not ready to go all in, or invest in the full course, then there's a starter pack, which is a quick breakdown. The starter pack is pretty much the gateway. It's a smart, low risk entry point into the from red to green system. It's only 995 pesos, but and then you'll get structured modules covering market awareness, making sense of market signals and to avoid reactionary mistakes, stock research fundamentals. There's also nervous system mastery, very important when you're managing money, you're investing, and then basics of portfolio equity execution. It's also part there. Yeah. Eh, and yeah, and when you're ready for the full system, you can just the cost of the starter pack is creditable if and when you want to upgrade to the core or the premium or the legacy offerings or programs. So yeah, uh, so the starter pack allows you to validate the quality of the system before committing further at a very low cost. No? So if you're looking for a methodical, professional grade approach to investing without the usual noise, this is it's a place to start. But I would strongly recommend the core offering at the very least. So so in the end, investing just like in life, structure beats chaos and discipline beats drama. I think no, not much arguments there. No? And somewhere in between, that's where the real creativity happens. In today's if today's session or tonight's session sparked something in you, Jonathan, Romeo, Ron, Jelly, Tim, um, if it sparked something in you, I'm posting a link in the chat. So Tim, please post the link in the chat where you can dive deeper into from red to green, and hopefully you will enroll now and see how to start building your recovery the right way. And if you're still thinking about it, no pressure. You can book. Yes, this one also. You can book a free 15-minute call with me, and we can talk it through together. Um, so your recovery and your next level of freedom starts with this. There. Now, I can open the questions. I can open the floor to Q&A. Yeah, if anyone has any questions. Oh, yes, we can start with what's in the chat. So, see, Jonathan, I believe, had a question. Is this system applicable to local stocks, to local stock market? Yes, it was built mainly from experience in the local stock market. But as you will find out if you enroll in the course, it is also applicable to investing in regional or global stock markets, global equities, because the systems um, are are um, are universal, no? And principles are universal. Is there an estimate how much gain in percentage I can book from? Oh, the investment is $499, which will be your break even. So 499 depends on your investment, um your investable funds, of course, no? So I again, I'm not in the business of giving predictions or making predictions. If I'm trading already, uh not in the bit. This is more for systems. I don't have an estimate of how much you will gain because I'm not familiar with how much you will be investing. But the objective here is to outperform the if you're trading Philippine stocks, to outperform the Philippine stock exchange index. And my track record speaks to that. I've been using this. I my fund in 2016 up to 2021 was the best performing fund in the country by a mile. You know, so if that's any indication, but again, don't want to chase and predict the returns or whatever. What this system is all about is playing the right way, investing the right way. The returns will follow. From my experience, the returns will follow. Just invest the right way with discipline and clarity. Thanks for that question, Jonathan. Appreciate it. Maybe before we go to the other questions, may I ask you guys to type in the keyword in the chat to avail of the starter pack, the free starter pack. Tim, you want to give them a clue what the yeah.
It
Anyway,
starts with letter S.
starts with letter S. In the meantime, happy to take any more questions.
Yeah,
Structure, yes. So
with
we'll give
Sir
Jonathan
Romy.
a free starter pack, Tim, no?
Yep, got it.
Okay.
And also, if Sir Jonathan would want to book a 15-minute call with you, Sir Jun, to
Yes.
discuss further.
Yes, Jonathan. Well, you can start the starter pack, and then I would encourage. I would like to invite you to have a 15-minute call to walk through the. If you have any other points of clarification or questions. Thank you for your time and your presence. Maybe last call for any last questions. Otherwise, thanks for your time, and uh, looking forward to that 15-minute call with maybe Jelly, Jonathan, or Romeo soon. Appreciate your presence here.